Well, good afternoon, Maverick traders. It's Joe with you here on the 16th of April. It's Tuesday. Let's get into a market roundup. I'm going to give you my 2 cents as always. Take responsibility for the outcome. I'm going to break down the meaningful news of the day. I'm going to break the markets down technically, and as always, share trades with the community.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you can see that we had a little bit of a continuation from coming out of a weekend that was a little bit tumultuous. Let's jump into the daily news. Overseas worries continue weighing on the markets. However, it looks like the markets took a little bit of a pause, but that is just for today, and it has put us in a very interesting place when it comes to the markets. Technically, we'll get there in a second. U.S. economic data, though, however, I should say, remains super strong. It's reducing chances of a rate cut. This is a double-edged sword as the markets were kind of anticipating a rate cut. Maybe you're going to see a little bit of a corrective action because of the disappointment. However, a super strong, growing, expanding economy is never a bad thing. Let's get to how we finished for the day. Pretty much flat across the board. Take a look at gold being the biggest winner, up about a 1%. It's come off there since. These are the futures. Oil flat, Russell's flat, Qs, S&P, and Dow flat, after a pretty good move to the downside yesterday. Advanced decline line, 68% decliners, 28% advancers. So yes, people did go south, but the majority of the stocks that did go south did not go super south. Above below the 50-day moving average is 75.25. The last few days, this corrective action, this kind of a rollover with some of this overseas news, kind of insult to injury, has actually pushed us down to a 75.25 above below 50-day moving average scenario. Now, overall, folks, this is kind of this perfect story as we jump straight into this chart, or I should say perfect storm, as these markets were already on their way to some sort of a corrective action. You can see, well, let me go ahead and draw this line, because we get this really nice steep line, and it actually correlates with this 20-day rising moving average. And then I started drawing our consolidation box, and I do think I actually took it down to this point. We are definitely below that over the last few days. Now you're starting to see a couple of bearish signals. We're seeing a 20-day moving average rollover. We're starting to see a 50 flat, and we've broken both of those. And now we're starting to look back to support levels. So this becomes this area that I think is pretty interesting when it comes to the artist or the person drawing these lines. And it really just depends on the line in the sand you want to draw. So this looks pretty scary. It looks very bearish over the last couple of months, which I've got from basically January. However, if I was to expand this all the way back, you would see that this is just kind of a blip, or not that big of a deal. It is significant to us, or it should be significant to us, as, let me erase these lines, as it is breaking a pretty large support level, which is that 50-day moving average, which we haven't seen in quite a while, folks. There's your support levels. Here. I mean, this thing loved to stick at its 20, but once again, if you go further back than January of 2024, you'll see that this thing has come up. It's almost a euphoric move to the upside. So here we are, breaking across this 50-day moving average. So what are we going to do with this? Well, it is bearish. It is bad, we're going to say, because it's broken some support levels. But is it trend setting? And I'm going to go ahead and say it, folks. No. The answer is no. Let's move to the Qs. It does look like that our +3 market has definitely run its course. I will give you that. We had a little bit more of a consolidation here with the 20 and the 50 as they're starting to pinch. And actually, this 20 doesn't look like it's rolling over nearly as much as the SPY does, but it's still bearish overall. And it looks like it's doing the same thing. However, it's got more of a higher support level than the SPY. That line was incorrect. Let me try it again right through here. So it's funny because the SPY was outperforming the Qs for quite some time, but in this corrective move we've seen over the last few days, the SPY is definitely falling further. The Qs are actually holding in, which is what we expect, because the communication sector in tech has always been kind of the leader, up to this point. So overall, guys, let's take a look at the heat map. Lots of different colors. NVIDIA hung in there. Apple went down. J&J is down. Tesla's down. Lots of browns, some green, so on and so forth. But look what really kind of participated in that corrective move today. Energy, real estate, utilities. I'm starting to see a lot of weakness in healthcare. And they're pretty specific to individual stocks within it, but it could be the beginning of something moving forward. But when you have energy, utilities, basic materials, these things are pulling back after they've kind of been a leader over the last few months, which is kind of a flight to safety. So these markets are kind of back and forth up in here. It's definitely toppy action regardless of what's going on overseas and regardless of the disappointment when it comes to the lower chances of rate hikes. So I seriously think we just are up at this area of nobody knows what to do, nobody's comfortable, and we're seeing some skittish movement. That's all I'm chalking it up to. However, as we move over to our outlook, I am stuck with this -1 and -1. And the reason being is because I have to use my data points. And below the 20, below the 50 are two bearish things, and the sloping 20-50, because the 50 hasn't sloped yet. And I actually could call this a -1.5, but I'm not going to, because this is, let me get my little line here. This is one continuous move. What I want to see is this action, whether it goes to here, to here, to here, and then the next rollover. This pivot point will really, for me personally, drop this from negative to -2 or -3 or back up to a 0. It's the first retracement from the pivot. Right now, we're in a little bit of that free fall. Outlook for the week and a -1 for the month. What I mean by that is, let's not throw on too many aggressive bears here, but let's not abandon the bulls that we have, and let's not stray from any bulls that could arrive, especially if we start to bounce. So let's take a look at what we got to look at. Not much. I kept AEM. Obviously, it's in the correct sector. Mining, gold, flight to safety. I've got Meta in there. I threw on Netflix to add. Thought it'd be kind of fun to look at. Something new to the sideways list. But we do have some potential bears. I kept Baidu. Tesla's a new one. UPS. Southwest Airlines look kind of cool. And then T-Mobile as well. So let's jump into our first trade here. This is AEM, as you can see. Nice little high tight base going on here. It's outperforming. It's definitely a defensive play. It's got reaction golds on a tear. Let's go ahead and play it. If this can consolidate and continue to move higher, might as well play it as it goes. My entry on this one would be something a little bit more as a continuation play. I'd like to see this thing above 63, 63.5, 64 for anybody who wants to be a little bit reserved to see if indeed this isn't just a flash in the pan or something that we could see push higher. We are getting into earnings season, so bad earnings and some slowing down in the economy would actually increase the flight to safety, and I think gold would also continue to participate in that. Let's jump over to our sideways trade. You guys are probably sick of looking at Meta there, so let's take a look at Netflix. And Netflix I liked kind of right around this area. Now this is difficult because it did have that huge slide. It's got a little bit of a reactionary bounce. If this holds here, let me get this line right around that 600 mark. If 600 can hold, then I do think we might get a little bit of a float back up to that 640. And we could play the 610, 640 game. But if it doesn't, I mean, right now I'm pretty impressed with it because it was an up day over the overall. Most markets did finish flat, but this one seemed to come back towards its 20-day moving average. So it's glass half full here. So we'll see where it goes. If it starts to show signs of going up here, this would be a nice little sideways trade. However, if the markets kind of fall apart and this breaks down, then it's in the same boat as a whole lot of those high bases that are actually breaking both support levels. Speaking of which, let's jump over to our bear. I like T-Mobile here, and I think it's just a pattern overall. This is a really fun pattern for me. You call it a head and shoulders, and this is kind of a made-up one. There's a shoulder here. Here's a little bit of a head. Oh, geez. A little bit of a head here, and then we got a little bit of a shoulder. So what I like about it is the neckline. And so you guys can call this a descending triangle. From this point, you can call it a head and shoulders pattern from up to there to there. It doesn't matter. But I like the retracement. I like the, boy, I drew too many lines. What I like is this crossover, but bearish crossover right as this big red candle happened. The 20 crossing below the 50. Both you can see are sloping lower. It's this line in the sand here at about the 159 level. And let me draw that, make sure it's close. Yeah, we'll call it the 159. As if this can roll over with any sort of significant increase in volume and candlestick, this might be a fun bear. So I'm keeping an eye on that one. Overall, folks, the market's corrective action continues. Overseas worries has and will cause volatility. Whether something good or bad comes out of it, I don't think it makes a difference. I just think it's enough to shake things up. Markets could be reacting to a decrease in the rate cut probability, profit taking. A lot of traders put some money into these markets thinking we're going to get a couple of 3 rate cuts. Now it looks like 2, maybe 1. There's a part of that. However, regardless of the reason, the markets are still in corrective action mode. And we're due, I hate to say the word, but they were due for some sort of a haircut. Economic data remains strong. The CPI is strong. Retail sales is strong. If the economy remains strong, we will not get a bearish market. I don't know how many times I can say that without some sort of massive impact to the economy. You just don't go from this strong to bear overnight. It's got to show weakness before that happens. Fed sees an economy too strong for rate cuts for now, and I think that's disappointing some of the people that wanted it. And the word disappointing is not bearish. It's just corrective. Check potential trades. As always, earnings season is upon us. It's kicking off here. So we got to check those more and more. I'll actually have some more trades to share with you as they come up. Thanks, folks, for joining me. We'll talk to you next time. Bye, everybody.